Welcome to all of my students in today's mentoring session. Today is 13th of August, 9:33 p.m. And as usual, we'll be starting with the weekly sectoral analysis. First, we'll be starting with Nifty, Bank Nifty, PSU and private banks, and so on. We'll go towards the mid-cap index. Now, first, if I go to the monthly time frame chart of Nifty Spot, what we can see, overall trend is exceptionally bullish. You can see this candle. Obviously, this is not complete, but as of now, it looks good on the chart. RSI is also rising. It is at 76. We should just keep an eye on this particular parameter. Nothing to worry. Overall trend seems to be up. Okay. Now, if we look at this particular chart, what we can see, a lot of consolidation over here. I think 1, 2, 3, 4, 5, 6, 7, 8, almost 2 months consolidation. And then we have these two bullish candles. So this is a very good candle. This is an average candle, the current week's candle, but still it's looking good on the chart. Now, if I plot the Fibonacci extension over here, we are just trying to check, are we near a resistance? We have just been able to close above this resistance. So we have some sort of room left to travel higher. The next level is somewhere around 17,500. But, my nature is not that I will always try to talk about very big rallies, very big levels. I'll always go one level at a time. So yes, we have a lot of space left for the large caps to rally. Overall market looks fine, but we need to concentrate on other sectors as well. Now, especially in my last week, I think somewhere over here, I had clearly mentioned that the Nifty Spot needs to close above 16,350, and then we'll be able to see higher levels. I think this close came yesterday, and then even in my yesterday's Nifty short-term view, which I generally post on a trading day about Nifty futures, I had given 3 levels. All of these 3 levels have been tested immediately today because we saw a rally of close to 1% today. All right. Now, Bank Nifty has been underperforming if we compare it with Nifty. And why I'm saying so, if you see the chart of Nifty, it has been able to make a new high. Bank Nifty is, maybe it has closed 232 points up, but overall it's still trading in the similar zone. Looking at the monthly time frame, I don't think anything is wrong in the banking index, but the issue is in the weekly time frame. Same thing I have been repeating now since we still know difference over here. We need a close at least about 36,400, 36,500, and it should be a weekly closing basis. And after that, in the next week also, if the rally continues, we'll be able to see the banking index continuing higher. Even over here, I don't think anything is bad. Yes, this is not a good looking candle. This is also not a good looking candle, but the weekly charts are fine. If you have a higher close, I think all this negativity will just disappear. PSU banks. Now, if I look at the PSU banks, I had clearly told last week that this particular zone, this resistance zone, until and unless this is not surpassed, this will keep on haunting the PSU banks. So you have to be very, very careful. If you look at the weekly time frame, things are not that bad, I would say. The weekly time frame is slightly tad better than the monthly time frame. You can see some sort of support zone coming over, not a level, but a zone, because consistently many candles have been trading in this particular area. All right, but the trend is flat. There is no uptrend, there is no downtrend over here. There is absolutely no trend. So don't jump onto trades in the PSU banks. Kindly be very, very careful, because in the daily time frame, the trend is down, but what we have over here is a dragonfly doji. Dragonfly doji is one of the most bullish candles which exists in the candlestick methodology. And then we have a green candle. So it's a mixed match sort of stuff. Once I think price starts rallying higher, and especially the stock is SPI, if it starts sustaining higher, only then start looking at it. Do not jump aggressively in this trade. Personally, as of now, at this level, I'm not very much interested in SPI. You saw how the resistance has worked over here. I think somewhere over here I had traded SPI just for a short-term move of couple of days I shared a educational post, went up 5%, I booked, and suddenly it dropped. Why? Just because of the monthly resistance band. Private banks, on the other hand, are looking different. They are looking much stronger. Although the PSU bank, the SBI has rallied nicely, still the overall chart of the index of private banks is looking much better according to me. It's looking very much similar to the bank Nifty index. Over there, I think the prices are somewhere near 78.6. Currently, we are around 61.80% Fibonacci retracement. We just need to close above this recent high, and not just one close. If it closes a week higher and then suddenly next week a red candle is found, there is no point. So once we close above the recent high, and if we see some sort of follow through buying coming in, then it is, looking very much attractive. Imagine yesterday we made a new high in Nifty, and today if we had a 50 points gap down and a consolidation, would it make any sense? Would it be fun? No. So we need a follow through buying coming up in this index also. Auto index is a very different ball of game right now. Auto index, if you see in the monthly time frame, the trend is up, but the candles are mixed match once again. If you see the candles, there is no problem in the RSI. This is an inverted hammer. This is sort of a high wave candle, not exactly, not classical high wave candle, but sort of high wave candle. This is a bearish belt hold. This is also like a shooting star. So this resistance is coming up obviously from this trend line which I have drawn over here. Until and unless this trend line is not taken off, you will not be able to see a very large rally. Now in the monthly time frame, we saw that the trend is up. In the weekly time frame, yes, the trend is completely fat, no downtrend, no uptrend, nothing. So there is no point of looking at very big trade or something like that. Absolutely, the trend is flat. And in the daily chart, if you see, there is some sort of support. This is, I think, so the support band I have been sharing now at least from a couple of weeks, anywhere between 10,100 to around 9,900. This is a strong support band as far as daily chart is concerned. So till the price is above this particular band, there is some sort of hope. Possibly the selling will get arrested and some sort of bounce may come up. But if you're looking for a big move, a big profitable move, we need to first see prices trading higher in the weekly and in the daily time frame charts. Until and unless that is not happening, please be very, very careful. One of the stocks which I like personally is Ashok Leyland. This is one stock, if you compare it with all the other stocks. As of now, I know it's not looking good on the chart because after a big rally, it has suddenly crashed. It's not looking that great. But again, if it starts going higher somewhere over here, around 140, 135, 140, then again the charts will improve. As of now, I don't want to do anything with it. But this is one stock which has fallen less in comparison to all other stocks. So just keep a watch on that particular chart. All right. And the second stock is possibly Tata Motors. As of now, there is nothing visible for a trend follower. But as a contrarian trader, there are few things visible. Just keep a watch on it. Don't jump into it because there is no trend currently in the daily time frame chart. You'll have to wait patiently for an uptrend to emerge. All right. Now the finance sector is looking exceptionally bullish. You can see it has been able to close above the recent high. If you have a look at the weekly time frame, absolutely no problem. Monthly time frame, absolutely no issues. So overall, it's a bullish looking chart. Try to find out some good stocks for swing trades. And if any good stock is also coming out for a positional trade, you can also go for that. FMCG pack is in an uptrend, but doesn't have the sort of momentum which other sectors have. You can see it's sort of flattish. And the reason for that is the monthly time frame is good, but weekly time frame suddenly somehow has came up with a lower high in RSI. This is not a top out or something. This is every negative divergence is not a top out. Few are not. So basically this is, as of now, doesn't look to me that this is a top out or something. It is just a sign that momentum is waning basically, but possibly with some sort of buying coming up and some sort of fast buying, not just buying and slow and steady, but a little bit momentum. I think this negative divergence will vanish, which happened even in Nifty. If you remember, last time I had told you that if the negative divergence is broken, generally the rally comes very fast. And that is necessary even over here in FMCG pack. Stock to keep watch is a stock which everyone is hating recently in the market, unfortunately. Just keep a watch on this stock. If it rallies higher or something, maybe you will find something into it. All right, IT, no change in the state of trend from my end. No change at all. You can see the trend is exceptionally strong. The RSI is at 87.38, extremely overstretched. I don't even need to put a Fibonacci. We'll just do it for the sake of doing. If you see, it has already surpassed this 261.8 and it's trying to test 35,150. Currently we are at 32,678. So there is some space left, but it's very difficult to say whether the rally will continue or not. But I can say just one thing: if you're holding stocks in IT, just keep on holding them, just keep on trailing your stop losses, and jitna upar jata hai jaane do. Your target is the moon, just let them go up. Just trail your stop losses. Avoid initiating new swing or positional trades. If you want, you can initiate a swing trade, but I don't think you will get any such new trades as of now, because mostly all of the stocks would be going higher. If you find one stocks or one or two stocks here and there, it's fine. But otherwise, the sector is pretty much overstretched. Try to avoid initiating new trades. Purane trades ko just keep on trailing them with your stop losses. All right, metal pack. If you remember last time I had told, stay away from the metal pack. Some sort of consolidation, some sort of correction is probable, and we saw a quick short-term correction into the metal pack. This is what I had warned very clearly in the previous week's weekly sectoral analysis. Now, once again, the trend is up, no doubt about that. It is overstretched also. If you look at the monthly time frame, these two candles are not looking good. This is sort of hanging man or a doji. This is actually a hanging man. This is sort of a long-legged doji. So indecision is lurking in the weekly time frame. In the daily time frame, we can see some sort of profit booking has happened. I think some sort of more profit booking, if it occurs, I'm not sure what's going to happen over here. If some more profit booking happens in this sector, and then again, if it starts rising and you see some sort of new swing trades coming up, you can go for that, but avoid taking new positional trades. If you're holding older positional trades, you can continue holding them with the trailing stop losses. Pharma pack also, if you remember, my friends, I had clearly shared that this particular sector can come down. Some sort of correction is probable or sideways move is probable. And what we can see, high wave candle and a red candle. This red candle is not that powerful, but at least it is interrupting the party which was going on by the bulls in last 3-4 weeks. And if you see the weekly chart, the main culprit is in the weekly chart. Basically, price was probably near a resistance, you can see, and there was some sort of negative divergence. You can see higher highs, lower lows. So some sort of correction is probable. Maybe it can continue, maybe 1 week, maybe a couple of weeks. I don't know till what time. Till the time it is continuing, just don't do anything. Yes, if you're holding older positional trades, if you get stopped out in them, just get out of the trade. Don't think much. But apart from that, just don't do anything. Wait patiently for the right moment. That's it. Just wait. Keep a look on this sector. Do not avoid this sector completely. Keep a watch on it, but wait very, very, very patiently. Maybe in a week, maybe in a couple of weeks, if everything gets solved out, maybe we can have a new buying coming up and then maybe things will improve. I don't know what's going to happen, but as of now, don't do anything. Just wait. Now, mid caps, this is something which everyone have been discussing. Now, everyone's portfolio suddenly came down because there was a sudden correction in mid caps. But last week itself, I clearly told that some sort of profit booking, some sort of consolidation is probable in mid caps. Be very, very careful and be ready to trigger your trading stop losses. The reason was this negative divergence. This is not a top out sign. It is not a top out sign, but yes, certainly in the daily chart, it scared everyone. But if you look at the weekly chart, it's nothing much. It's just 1 week down and then a sudden pullback. So basically, yes, you can look for swing trades if you find them in your trading setup. Avoid new positional trades at all costs. I don't want to go for new positional trades, especially in a sector where I have some sort of negative divergence coming up. Not interested. Even if the stock is going to fly, not interested. Just go for the swing trade and end it wherever it does. All right. So I hope this weekly sectoral analysis helped you. And now I'll be sharing something new with all of you. Just give me a moment.